The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 24th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. But if you've got a question and you can't call in, well, we've got your back. You can send me an email. Now send that off early and send that to steve@tfnn.com. Inside that subject heading, please put radio show, maybe a question mark. Of course, if you're inside our Tiger's Den, well, then any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. We start our day with a mixed bag. The mix goes like this. Right now, I got the Dow off 131, S&P down 10, NASDAQ up 45, Russell's off 12, semis are up 56, Tranny's down 372, gold's up $6, silver's up a penny, lights recruit is up 80 cents, natural gas is off 8 pennies, and a 30 Treasury print out 113.31. That's back 24 ticks. Let's try to figure out what all that means by looking at what? What are we going to go take a look at first? I'll tell you what we're going to take a look at first. We're going to go take a look at the Dow Equity Future Contract. So let me get this set up here. We're going to switch over to, and the reason we're going to look at the Dow, we just simply take a look at the equity futures right here. We can see that the Dow has been, both the Dow and the Russell, the Dow is up, but the Dow is one I was most interested in because it was trading right up into resistance, the top of that profile. If you're wondering how these profiles work, they just simply do. They really provide excellent support, objective support and resistance levels out there, and you and I, we get to look at them over and over and over again. So it's not a surprise that we're seeing the Dow pull back. The question is this the extent of the counter trend move? And that's what we're going to try to go answer out there. We'll have to take this one step at a time. So let's begin that process by taking a look at an instrument that is up at resistance, that is up at clear resistance out there. That is the Dow Equity Future Contract. Now let's go see what's going on under the covers from an intraday standpoint. Now, on a 5-hour time frame chart, we do not have a top. What we have is a negated TD9 count top, with price also running into resistance at the top of its profile, 38,801. Price would have to close below 38,465 on a 5-hour basis to suggest that maybe that is the extent of the counter trend move. For the 4-hour chart, it's the same pattern. In other words, there is no topping signal that I've got. There's just a profile. It's bearish in structure with price pulling back to test the bottom of that profile. So here's a key level. We have not seen it close on a 4-hour basis below the bottom of a profile since the rally began at about 2 in the morning on the 19th. Now, we're not talking about a ton of days out there. Today is the 24th. But still, what we're watching here is that support level at 38,555. Another support level to look, because we've got a Rhodes Momentum Indicator top on the 2-hour time frame chart, is 38,450. But along the top row here, what we can say is, yes, price got up to resistance. But what we can also say is no key levels of support have failed at this moment in time. Now we go down to the lower time frames, the 60, 30, 15, and 10. We see on the 60-minute time frame chart, Rhodes Momentum Indicator top that formed at 3 o'clock this morning. Some folks were actually closing out their trades at 3 o'clock this morning, and that pattern was certainly one of a signal. In fact, the 30-minute time frame chart, if we pull this back a bit, give me a second here, we'll see that it was forming its top at 2:30 this morning. Now, this case, in the case of the 60, what price has done, it's pulled back, it's below profile level, so it could be heading to 38,450. So at 38,450, 38,465 on the 5-hour time frame chart, looks like a real key area to watch. In the case of the 30-minute time frame chart, it did form a TD9 count bottom. That took price right up into resistance, the top of that profile at 38,749. And now what we've done, or what the market has done, it's negated that pattern, and it has got an A to B equals CD pattern to the downside. Let's open up this chart. Let's go draw that pattern in. So let's pull this back. So let's take a look at the A to B. So that's easy enough to identify out here. And then I'm just simply going to go ahead at this stage here and just move that A to B line over to the C point. The C point is the highest high that forms after the B point, and you can see we are below the 1-to-1 level out there. So maybe we're 1.27, 1.618. I'm not going to go ahead and do the math on that. Really what I'm doing is suggesting to you on a 30-minute time frame, you need to see a bullish reversal candle to confirm a Gartley buy pattern or just simply a buy the D point pattern. We look at the 15-minute time frame chart, we don't see such a signal. We do see that we are in wave number 7 as we speak. That needs a higher low to confirm. That's both in the 15-minute and in the 10-minute time frame chart. So if you're trying to take a move to the upside in the Dow equity future contract, I would wait at least for a higher low on a 10 and 15-minute basis out there. But we could be, so the real shorter term time frame charts are failing, suggesting lower price, but I still think it's going to boil down to that 38,465 level coming off of that 5-hour chart out there. And part of the reason is because it has both a TD9 count and Rhodes momentum indicator bottom, and it has a negated TD9 count top. So the real question is price just pulling back to test support? And in that sense, that support is at 38,465. So that's what's going on inside the Dow. Let's go take a look at the ES Mini out here. It's going to take just a few moments for this to populate. Is there anything that Stevie can share with you as well why that's going on? And I don't know the answer to that question. That's why I asked that question. What I can share is, you got a lot of instruments that are up at resistance. You had natural gas at the top of a consolidation. You had Lights Recruit at the top of its profile. You've got the Dow Equity Future contract that we were taking a look at out here. Support, you've got gold that was testing the bottom of its profile levels out there. So it's really all about support and resistance. When we take a look at this ES Mini, you can see that price basically got up towards its red oscillator and change line. Now, a red oscillator and change line it tells us that its price oscillator is below zero. Being below zero is basically a bearish, generally speaking, signal. But when we have a falling price oscillator below zero, well, then it is definitely bearish. And that's what we've got inside the ES Mini. But definitely bearish means what? It means where is support? We just spoke about how it's really important to understand where support and resistance is at. We take a look at the 5-hour time frame chart out there, formed a nice TD9 count bottom, and price ran into resistance where it should have, which was its breakdown level at 5120. Now here the level of support inside the ES Mini, the current profile, the support levels at 50.92. We're at 50.96 right now. That's a 5-hour time frame chart. This bar is not going to close until 2 p.m. Does it matter what takes place at 11:14? Maybe, but not necessarily. But watch that level, see if price holds. You also have a 4-hour time frame chart, which is not, it has a sell the D point pattern. So that most certainly is out there, and it's about to test support, and that's at 50.93. So we've got 50.93 and 50.92. Sounds like a pretty important support level. And below that, you'd be looking at 50.78. That's coming from the 60-minute time frame chart. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's get to some of the requests that have come in, and I'm going to go a little bit out of order just simply because I've got the intraday charts up on my screen here for gold. So we're going to push Ron R. inside the Tiger's Den up to the front here, and he's asking the question, what charts or what time frames, I think I'm paraphrasing here, what charts, time frames would I use for an intraday trade, and is there an intraday trade set up on Goldilocks? So, Ron, the answer is yes, but that trade has passed. So let me show you. We've shared with you, or I've shared with you, the fact that gold has pulled back to the bottom of its daily bullish structured profile, as well as a TD9 count breakout level. That 23-2170 area is a very key area, and it's a very key area of support. We saw that yesterday as price tested and rejected that level. So that was telling you that, if you're going to look for a trade in gold, an intraday trade in gold, you should be looking to the upside unless that level fails. It turns out that if we take a look at gold, you've got a TD9 count bottom that formed yesterday on a 5-hour time frame chart. Let me make sure it was pretty sure it was yesterday. It was yesterday. You had a TD9 count bottom form on the 4-hour chart, a TD9 count on the 2-hour chart. So all of that was really adding to the idea, Ron, of trying to take an intraday long trade inside of Goldilocks. If you look at a 60-minute time frame chart, it had a Rhodes Momentum Indicator bottom. This formed yesterday. So that pattern was really not in play this morning out here. But if we take a look at a 30-minute time frame chart, what else do we see? Well, we see a TD9 count bottom pattern that formed. Well, you get bar number 8 that formed at 6 o'clock. You have bar number 9 at 6:30. And then at that point in time, you also had a bullish structured profile. And that was telling you that the buy zone was between 23.26 and 23.29. Now, that was giving you a buy signal. But you also had another buy signal on the 15-minute time frame chart, Rhodes Momentum Indicator signal at 8:30 this morning. And then on the 10-minute chart, that was at 8:30 as well. So that's really what you would be looking for. As far as which time frame, really you're kind of setting it up on my recommendation is to set things up like this, where you have multiple time frames, where you can keep track of the TD9 count pattern that is out there. I teach you the Rhodes Momentum Indicator signal. So even that is something that you could do on your own with your set of tools out there. And so I believe that at this stage here, if I were to tell you to get in, I don't have any kind of a topping signal or anything other than the mere fact that that TD9 count bottom on the 2-hour time frame chart has run into resistance, and that is both the top of its profile as well as its breakdown level at the 2350. And that's why I'd be very hesitant to suggest that you take a long position. But in essence, and this was really an example to be shared with everybody out there, at least how I view the charts and how I take a look at different time frames that are identifying either a top or a bottom, and then where we go from there and how we use those intraday periods. So I do hope that that helped you out, Ron. I'm sorry that I can't give you that trade, as far as I see, has passed, and that you also understand another reason I'm not going to suggest that you even chase this is because we're dealing, or price is dealing with that resistance on the 2-hour time frame that did have that TD9 count bottom pattern. So thanks for that request. Let's go to our next request. This is coming in from Robert this morning. Wanted to take a look at Tesla. So in the case of Tesla, what do we know? We know that this is gapped up, and that gap up this morning has formed a Rhodes Momentum Indicator bottom pattern. Price is traded above profile level. So that suggests that it wants to run higher. Now run higher to where? Since all I see out here on the daily time frame are some additional swing points in the 180-ish area out there, that's a possibility, but we don't have to do that. We can just go, again, take a look at our weekly time frame chart. And the weekly time frame chart, which does not have a bottom pattern confirmed just yet, but you could get a bullish reversal candle this week. And in fact, we do on Friday, and right now it's a bullish piercing candle, which means in order to get that candle, it has to close halfway inside the bar from last week out there. So you could go measure that. You can figure out where that halfway point is, and on Friday, if price closes above it, the weekly chart will have generated it by the D point pattern. Let's assume right now that that is a likely outcome, with the daily chart having gapped up and forming both a profile change in trend, a Rhodes Momentum Indicator bottom, so price should likely target that red oscillator and change line. That is currently printed at 170 and change. The change is 86 cents, but that change is not going to hold steady or anything like that. So that is where price is headed to. Now, in the case of Tesla, on its monthly time frame, what price has done here, Robert, is pulled back to its bullish structured profile support zone, 144.38 to 165 and change out there. So Tesla likely to get up to that 170 area. And if price can overcome that, then we should see a move up towards the 192.07 range. So Robert, hope that helps you out with regard to Tesla. Jim wants to take a look at Apple. So let's take a look at what it is doing out there. And we take a look at Apple. It is right now does not have a bottom pattern. In order to get that bottom pattern, Stevie needs a bullish reversal candle to do that. Yes, we're trading above yesterday's high, but we're also doing is running right up into resistance, and resistance being the bottom of its profile. So the bottom of the profile is at 168.24. That begins the resistance zone. The resistance zone on the daily time frame runs from that level, 168.24, to 169.36. That is a bullish structured profile. And so, Jim, price needs to, if it's just a counter trend move, and right now that's what we have to call the move in Apple, it will remain a counter trend move unless you see a close above 169.36 out there. Monthly time frame, not really much for me to share here that I can see, nor is there on the weekly time frame and monthly. On monthly chart says, hey, look, if we continue to head lower, 147.01 would be a next downside price target out there. So that's what I see when I take a look at Apple, Jim. Let's go take a look at Airbnb, Airbnb out there as well. That's a twofer. We take a look at Airbnb. What do we see? So the daily time frame shows a Rhodes Momentum Indicator top with price finding support at about its breakout level, 153.22. And now what we can see here is resistance. You had a nice gap up this morning, but right now price is back inside its profile. And so I would say you're trading Airbnb between support at 153.22-ish and resistance at 162.68. Now, at day's end, if price closes above 162.68, Jim, you've got a profile change in trend signal. Volume on a daily basis is going into a swing point from the day of April 11th. 3.5 million shares. So far in today's trading, you're at 1.6. So price is pushing into that swing point. That says that price should get back up there and at least test that high again, 166.22. Doesn't guarantee that it will be tomorrow. But if price does close inside that swing point, it's a wide-ranging bar, and that's a likely outcome. You should see another retest of that level. The weekly chart shows a TD9 count top, shows that last week may have been a false breakdown. What you want to watch here is 159.09. If you get a close below that, you'd have two consecutive closes below weekly profile. I'm sorry, that's not the bottom of its profile. please erase what I just said in the last 40 seconds or so. When I take a look, and we're going to start over on the weekly time frame. This time we'll get it right. Airbnb has a TD9 count top. Price is trading below its oscillator and change line. And as long as it remains below that, this is signaling that we could see a move down to 145.32. That would be profile support. Whereas if we see the Airbnb on a weekly basis close above 162.05-ish, that would be bullish and suggest that price would make a run for its top at the 170.10 area out there. So that's what I see, Jim, when I take a look at Airbnb. Hope that helped on both those instruments. We're going to go take a look at AEM. We're mostly going to do this when we come back from the break. This is going to be for, who asked about AEM? I didn't write it down. I might think it was Hector. I think Hector and Patty. And so the first thing that we can see with regard to AEM, it has a weekly TD9 count top that's going to complete this week. We come back from this break, we'll finish taking a look at AEM, then Starbucks, AA, the energy sector, Walmart, and Harmony Gold. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LARRYLIVE at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at AEM. This is for Hector and Patty. And I want to take a look at the charts here. Hector's specifically asking about the weekly chart, whether it's in a consolidation, an A to B equals CD to the upside pattern. So we're going to answer that question. First, let's look at the daily time frame. The daily time frame has a wave 7 top. That wave 7 top came on the trading day of April the 12th out there. So not until price ticks above that being 64.19, would that pattern get negated. Price is traded with inside a bearish structured profile. Now that swing point, by the way, Hector, on April the 12th did volume of 5.7 million shares. If we're trading inside it, we've been trading inside it for the last several days. For example, yesterday, volume 2.6 million shares. Today, so far, the first 2 hours of trading, 920,000 shares out there. So price is trading inside that swing point with light volume. Resistance at the top of the profile. The top of the profile here is at 63.79. Support is down at the 60.55 level. Now, you were asking about the weekly time frame chart. Well, we've got a top on the daily. We have a top on the weekly. The top on the weekly actually completes this week. But it was the high from 2 weeks ago. That was the high on bar number 8 out there. So price doesn't have to do anything this week for the TD9 count pattern to complete. And this suggests that price should pull back to 58.30. You're asking about the A to B equals CD pattern. We're going to go take a look at that momentarily on the black background screens. Here on the monthly time frame, shows that price is trading above profile resistance at 61.05. So it's signaling to us that there is a monthly profile change in trend out there. Of course, the month has to end, and really next month you need to close above that level as well. So now let's go explore the A to B equals CD pattern, the potential of a consolidation pattern, and a measured move on the weekly time frame. But we're doing that knowing that, just want to make sure we're clear here, these patterns will not come into effect unless we see the top on the daily and weekly charts get negated. TD9 count top on the weekly will make that one the most important as we speak right now. So first, with regard to an A to B equals CD pattern, the A point out there, very easy to identify. That's the low from September 26th. The high, also easy to identify, is going to be the high from May 1st of 2023. Again, it's a weekly chart we're looking at. This goes ahead and retrace. We find the next lowest low out there. That took place on October 2nd. Now all we really need to do is take a look at the B point. That was a trading week of May 1st. Volume there was 16 million shares. When that swing point was passed, it was with 22 million shares. So yes, there is a confirmed A to B equals CD pattern to the upside with an initial price projection level of 67.69. However, you've got a top that's in place right now. You've got that TD9 count top, and not until price closes above that level will this A to B equals CD pattern come to fruition. And it doesn't have to come to fruition. So I just want to make sure that that's clear. So yes, there's other patterns that confirm maybe a move higher. But in the meantime, right now, what we need to see is whether or not support holds should price move lower. Now, look, if price closes above 64.19 out there, then yes, that tells you about that price should, in fact, go ahead. Oops, I didn't have those charts up. We've got them up now. So here's your A, your B point. You can see the C point. You can see it was a 73% retracement out there, 0.786 basically. And you can see the B point out here was a trading or a C point. Not the C point. In essence, the confirmation of this A to B equals CD took place on the week of April 1st out there with volume of 22 million shares, taking out a swing point at a volume of 16.9 million shares. Right now, that TD9 count top is 64.19. The second question was, is this a consolidation measured move breakout? And I don't know which consolidation you were looking for. This was the only thing that I saw out here, Hector and Patty. And so, yeah, that's also in play out there. But what's in play is what we've got to deal with right here and right now. And that right here, right now is a top on the daily and a top on the weekly chart. And those are suggesting with regard to AEM to prepare for some type of retracement. Now, again, these patterns don't work all the time, but that's what the weekly chart is really communicating to us. And then if those patterns fail, then we can come back to the A to B equals CD and a measured move out there. So I hope that made sense to you with regard to my review. And as always, thanks so much for the request. Let's go move back to those white background charts and take a look at Starbucks. SBUX is the ticker symbol. Give me a moment. We'll get there. This is for Nicholas. And Nicholas just wanted a review of Starbucks. So let's see if we can figure that out. And that would be, you've got a nice TD9 count bottom that formed out there. And, price did close above the top of its daily profile yesterday and the day before, giving you a profile change in trend signal. Now, I realize that price pulled back this morning, but it's fighting its way and is back above the top of that profile. So what you'd really love to see here, Nicholas, is another close above that profile level at 87.83. And if you get that, you actually could be setting up an A to B equals CD pattern to the upside. But still a close above that, whether it is or it isn't, to close above the top of that profile on a daily chart out there is going to communicate that price should go target its breakdown level, and that's at 91.24. When we look at the weekly time frame, let me open this up. We had a bull sash candle last week. Was that confirming anything? Let's go find out. Let's go put in the A to B equals CD pattern out here for Starbucks for its weekly time frame. A point's easy to identify. It's the highest high that we're looking at on the chart. Turns out the B point was a TD9 count pattern. Now let's just simply go ahead and move this line over to where the C point begins, and you're a little bit shy of that A to B equals CD pattern to the downside. So at this stage here, I would have to say we don't have a completed pattern. That doesn't mean it hasn't bottomed. It just means we don't have a completed pattern. What we do have on a weekly time frame chart is resistance at $89 even Steven. If price were to close above that, Nicholas, that would be a positive. The monthly chart has a TD9 count top. Price is trading with inside its profile. It has a buy zone, I would say, that's between 73.33 and 81.67 out there. So watch the daily chart. Watch for that close above the top of its profile. If we get that, it suggests around the 91.24, but you and I just identified that $89 could be a significant resistance area when it comes to drinking that latte out there. I am not a coffee drinker, folks. I like the flavor of coffee, and yeah, I'll have a coffee ice cream or something like that, but I just do not drink coffee. Imagine if I did. I'd really be bouncing off the walls. So probably a good thing that Stevie doesn't drink coffee. Let's go from Starbucks over to AA out there. Not the Alcoholics Anonymous, but instead the Alcoa Corporation. And when we take a look at that, Alcoa formed a Rhodes momentum indicator top when we look at its daily time frame. And what has that led to out here, Fletch? It has led to a consolidation. You're long at 31. Price is trading above and closed above yesterday, the center of its daily profile. We're not trading above yesterday's high, although we have spiked it. Odds would favor that price is going to move up towards that oscillator and change on at 36.90. And if you can clear that 36.90, you're back up to the consolidation top at the 37.67 level. The weekly time frame chart. Let me do this on another. I don't know if there's really an A to B equals CD pattern. That's what I want to go test out. I'm not going to switch panels because sometimes I forget to go back. But I'm just looking at that retracement, that B to C retracement. Yeah, and that's what I'm referring to is this swing point down here from March the 1st. And when I take a look at that compared to the low from October 27th on a weekly basis, that was a 85% retracement. So there's no A to B equals CD pattern that I've got for Alcoa on the weekly time frame. We do have resistance at the top of his profile, 38.20. We'll finish this up when we get back from this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So, Fletch, the real issue that you've got in Alcoa, I mean, you've got a daily top and a consolidation and support is held, so that's just fine. It's really more neutral than it is bearish right now. We don't have a weekly time frame chart top out there, but what we do have is on that monthly time frame, that 38.20 level, and we've been up very close to that this month. That's your real resistance area. So, if it were me, I'd probably have a stop with a close below 35.09. Maybe 2 closes below 35.09, something along those lines out there. You'd still be in a profitable position, but if price can take out 38.20, you could easily see this run over time to $55. But before price would get there, it has to deal with 42.23. That would be the weekly TD9 count breakdown resistance area. So, Fletch, I hope that helps you out. And as always, thanks so much for your request. The one-armed bandit, Jack, inside the Tiger's Den, wants to take a look at the energy sector. So what do we know about it? Well, the energy sector out here is a TD9 count top. Pulled back. Why did it find support where it did? That's a great question because we don't have a bottom on the daily time frame. So for that, we have to go take a look at what's going on the larger time frames. When we take a look at the monthly, it has a TD9 count and Rhodes momentum indicator top. And price is finding support right now at the center of its bearish structured profile. And if we're seeing it close below that level, that's at 94.89 out there. That would suggest that price would run to 92.68-ish. And below that, 89.46. We take the monthly time frame chart, we can see that price is trading right now above profile at 94.71. So the monthly chart remains bullish. The daily time frame chart has held support now being its bullish structured profile. The energy sector, the XLE, should rally towards 97.01. If it can clear 97.01, which is a green oscillator and change line, tells us we have a rising price oscillator. And if it tells us where the price oscillator is located, and it's above zero. But if we can close above 97.01, that price oscillator begins moving north, beginning upward, and that would be a bullish signal out there. So that's what I see when I take a look at the energy sector. Jack, I hope that helps you out. As always, thanks so much for that request. G-Man inside the Tiger's Den wants to take a look at Walmart. WMT is the ticker symbol. Is that Walmart again? I always make this mistake out there. It is. So we take a look at Walmart. What do we see out here? I see a Rhodes momentum indicator top, and I see the potential for an A to B equals CD to the downside forming. Let's try to take a look at what that potential is. The swing point that it needs to close below would be the trading day from April the 2nd. The low of that is 58.88. The volume there was 19.5 million shares. Yesterday, this was pushing down with 18 million shares, so a little bit lighter volume. So you did get a test rejection of that swing point. Nonetheless, you still want to watch that level. We're still trading inside that candle right now. And if you did see a close below 58.88, that would go ahead and trigger an A to B equals CD pattern to the downside. What else is helping to hold support is that our daily profile support is at 59.16, and the weekly bullish structure profile support is at 50.53 out there. So that really adds the idea. Did I say 50.53? I meant 59.34. What was I looking at? 59.34. I hope it's okay, folks. I just laugh at myself almost all the time. Okay, so we take a look at the weekly chart for Walmart. We understand that that's key support area out there. So if you get closes below that, that could really be triggering that A to B equals CD pattern to the downside. Now, the monthly chart is saying, what the Sam heck are you even talking about? I'm in an A to B equals CD pattern to the upside. So you could draw that pattern. Here's the larger one now. We're just going to move this over to the C point. I'm going to see where we're at. And we are basically right there. So this has completed the one-to-one move, but it has not generated a bearish reversal candle. If it were to do that, boy, then you'd have a top on a monthly time frame, and that would suggest a pullback, likely to the top of its profile. And that's at about 54.99. So Walmart right now, it's holding support, and that's about the best that I can provide to you. So, G-Man, I hope that helps you out. Maybe I can do a better job for you when we take a look at the charts for Harmony. HMY is the ticker symbol, so let's pull those up and see what we can find there. HMY trading out now at about 867 with inside its bullish structured daily profile. It maintained its TD9 count top. The high was at 931. The close was 929. So Harmony Gold still has a TD9 count top in place out there. It may have something more than that, but it's got the TD9 count top. Let me see. Does this have a sell the D point pattern out there? It probably does, but let's just focus on the TD9 count top. We don't need more tops to really help us with anything. And that TD9 count top has found support where it should have found support, the bottom of its bullish structured profile. And that's at 841 out there. So as long as 841 holds, you would want to stay. If you're long Harmony Gold, you'd want to stay in it. If 841 fails, you're likely going to get to 784. So from a money management perspective, you want to keep that in mind. We do not have any... Now, we don't really have any kind of a top that I see inside of the weekly time frame chart here for Harmony. You'd love to see price stay above G-Man 825. That's that green oscillator and change line. I do not see a topping signal on the monthly time frame either. So it's really the daily. And on the daily chart, you really just simply need to see a close above 931 for Harmony to be on its merry way to the upside. So thanks always for the request out there. Let's go to our next request. This is from David in Panama City. He'd like to take a look at Spotify. And his question is, will Spotify fill the gap? So what is the gap that he's referring to out here? It's already filled the gap, the first gap. So I'll have to go check and see if there's a second one. So here's a gap on the trading day as an example for April 2nd. The high on that day was 270.72. The low on the very next day was down at 292.75. That's what created the gap. Now, when we take a look at today's price action, again, the high of the gap, again, the day from April 2nd, 293 even Steven. What did we get to today? We got down to a level of, hold on a minute here. The top of the gap is 270.72, 270.72, and today we got down to a low of 298.50. Is that right? Sorry about that. We got down to a low of 267.76. So that gap, if that's the gap you were talking about, that has closed. Now, the volume on that gap to the upside was 3.5 million shares out there. When prices moving lower yesterday and completing that, it was with 11 million shares. Wow. 11 million shares are going against 3.5. So it's really coming down with volume out there. So what do we have in Spotify right now? In Spotify, we've got price trading below profile support. So there was a new profile that formed yesterday. So you are likely going to get Don't know for sure at day's end, but you're likely going to get the first signal of a profile change in trend. You need 2 consecutive closes below 293. So profile change in trend can be a top. When I look at the weekly time frame chart out there, I do not see any kind of a top whatsoever, nor do I on the monthly. So that does say be careful out here. Let's take a look at what's going on volume-wise today. Spotify today so far is pulling back. And it's only a little over 2 hours of trading with 4.6 million shares. But again, it's going into that 4.6 million shares. So it's really pulling back with volume. Here's the level of support now that price is trading below the bottom of its new daily profile that formed yesterday. And that's down at the 239.14 level. But if you look at the weekly time frame chart, it has support at 265.62. Only a close below that is going to get us down towards that 239 level out there. So, David, I hope that provided you with the information. That's the only gap that I really see out here. I guess there's another gap way down here from the trading day of February the 6th. I don't think that's the one that you were looking at out there. But right now, even if it was, watch that 265.62 level. Right?
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. If we take a look at the daily chart here for the NQ, this is showing us the consecutive days to the downside in red, consecutive days to the upside in black out there. If we are in the beginning of a move lower, you typically only get a 2-bar knee-jerk reaction to the upside, and that's what we have so far out there. 2 to 4 bars, really, but 2 bars is the typical average out there. If we take a look at the actual NQ charts, we can see that today's rally, this morning's rally, are right up into resistance at red, oscillator, and change line, and prices turned down. That means watch support. support. So where are the next support levels to watch, pearls? Those are going to be down on the 60-minute time frame. And that's at the 17,508 level. If price closed below 17,508, that could suggest a move to 17,475. In the case of the 30-minute chart, it's 17,592. That's its breakout area. You do have a TD9 count bottom on the 10-minute chart. Nothing on the 15-minute chart. Would I hang my nail in my hat on the 10-minute chart? The answer is I would not out here. But watch support, 17,582 to 17,600, as well as the numbers that I've already provided to you. Let's go take a look at our next request that came in. This is from Nicholas, who wants to take a look at Wolf. And if we take a look at Wolf, it formed a Rhodes Momentum Indicator bottom pattern 2 days ago. You have a new profile that's out here. Support is at 22.38, resistance at 26.11. You'd love to see a bullish reversal candle on the weekly time frame, confirm a Rhodes Momentum Indicator bottom, and you have the potential over the next couple of months out here to form a TD9 count bottom pattern. It's too early to call that. With regard to natural gas and its profiles out there, I believe that was YOY. Here, with regard to natural gas profile levels on the weekly time frame, we're looking at the June contract. Price is trading below that. The key level out here to be watching is $2.12. That's the center of its weekly profile. The bottom of that profile is at 202. On a daily time frame, you've got a profile level at 1.948. Resistance up at 209 out there. And the monthly chart, we're well below all profile levels out there. Lastly, we can take a look at NVIDIA. NVIDIA, what is this doing here today? NVIDIA is trading below the bottom of its profile, so watch that at day's end. That profile level is 816.09. If it closes below that, odds favor we get back because we're trading inside this swing point out here from April 19th. Odds would favor we get down and test that low. You've got support at 755.94. Got through everything, folks. Have a wonderful Wednesday. I'll look forward to seeing you on terrific Thursday. Be safe out there. Take care of yourself.